Hello, traders. It's Wednesday, September 13th. We're about 2 hours into trading. Let's take a look at our last picks, see how they did. Let's do some market analysis, and then let's find a couple of new picks. LLY, that was a pick that I gave you. The recording came out Sunday morning before the NFL game started, and you can see how the stock has been inching its way higher. Go into the 15-minute chart. We'll see it a little more clearly. There's your opening Monday morning, and you can see how the stock has been working higher. In that video, I mentioned to you that people oftentimes will not buy a stock that's making a new all-time high. And that's because they associate trading with buy low, sell high. That strategy certainly works, but so does buy high and sell higher. So it's important that you understand the types of price patterns that you're looking for so that you're not just buying every breakout to a new high. LLY has the characteristics we're looking for. Nice, tight price action, big breakouts, follow through, another compression, heavy volume, heavy volume. If you take a look at Facebook, Meta, Google, Amazon, Apple, Nvidia, they all had similar charts at one time. And if you would have passed on these trades, you would have missed out on some huge gains. Lilly looks excellent. It looks like it's going to continue to grind higher. I still like it as a long. The short that I showed you was Mosaic, MOS. And here you can see that the stock is a little bit lower than when the video came out Sunday. So this is Sunday's price action. It gapped up a little Monday, but it's been drifting back down. I think this is still a decent short. The problem that we have right now is the market is not doing anything. And right now, we're looking at a 5-minute chart, and this is the price action that we've seen today. Lots of volatility and no follow through. Yesterday, big volatility, but no directional movement. Hey, Pete, where the heck is all this volatility coming from anyway? My God, those are some big moves. Yes, they are. We have triple witching coming up Friday. Institutions are rolling their positions from September expiration to December expiration. That causes higher than normal volume and it causes greater volatility. Now, if by chance during that expiration week we happen to get some big news and it gives us directional movement during the course of the day, then we're likely to see a very strong trend day. But we don't have that. We had the CPI come out this morning. I'm going to put up a chart of the S&P 500, and then we'll take a look at the pre-open action. And this is what the market did when the news came out. Long, long candle. You can see big range, but the market finished within that range. Lots of wicks, lots of tails, lots of chop back and forth. When I saw this price action right here, I knew that buyers and sellers were going to be paired off. We've seen that for the last month. This was going to be a choppy open with lots of two-sided price action. And that's exactly what we've gotten. That helps us prepare our game plan for the day. So what's the market going to do right now? Well, let's zoom out and let me go back to the SPY. And I use SPY because everyone has SPY quotes and it's a continuous contract. Unlike the futures, they expire 4 times per year. So we get nice, consistent price action. And I'm going to show you an indicator that I use. It's called AVWAP-Q, and it anchors the AVWAP to the quarterly expiration cycles. And you can see how it comes into play at 445.08. And you can also see the yellow line is the 50-day moving average. We are wedged right between these two levels. So the 50-day moving average is at 447.14, and then we've got 445.08 for the AV WAPQ. I think we are going to just chop around between these two levels. And what we're currently seeing is you get this spike up in 10P, bearish cross, be careful, seeing volatility, telling us favor the short side. If we see a little breakdown here, we get up to that 50-day moving average, whap. Where did we find support? Right at that AV WAPQ. You can see the low of the day is 445.08, exactly to the penny. Then we have this monster bounce. Okay, well, mixed overlapping candles in here, lots of tails and wicks. We're hitting resistance at that 50-day moving average, and we've got 10P getting ready to cross pretty soon. We're going to get a bearish cross in here. That tells me that if we can't get through this 50-day moving average today, we're going to start to see some selling pressure, and we're going to try the downside again. Let's go into the daily chart to see what we've got working there. I'm going to take the AV WAPQ off because it obscures the chart a bit. So we'll remove that. And now we have a little more clarity here. We can see we've got a downward sloping trend line here. We have an upward sloping trend line here. This is a wedge formation, and we're starting to compress within that wedge. We need to break out. We've just been flopping back and forth around the 50-day moving average. If we look at the price action, we can go all the way back to June. Well, now we're about 3 months later, and we haven't moved the needle one way or the other. Sure, we've traded on both sides of that level, but we're right in the middle of it. So we need that breakout. We need that market catalyst. Tomorrow we have an ECB rate decision. It's about 50-50 on whether or not they're going to increase rates by 25 basis points or not. We have the FOMC statement next week. That is about 93% that the Fed is not going to do anything. They're going to pause. Now, the likelihood that there might be a pause in November and December is around 45% for each of those 2 months. So the market is kind of saying, yeah, we're seeing a little economic softness and we think the Fed is done hiking rates. But the market's been wrong so far as well because they were actually pricing in a quarter point rate cut in Q4 and it didn't happen. And that's why we saw that big sell-off in bonds. Let's put up TLT, and you can see that as Q4 was drawing closer and closer, wham, we got this big sell-off, and you can see how the bonds are near the low end of the range. So it doesn't appear right now that anybody is super optimistic that we're going to see a rate cut. Then you would see bonds moving higher. So we've got this trading range right now, and everyone's waiting to see what's going to be the catalyst. Are we going to see weakening economic conditions? The Fed's expected to pause. Is that good news? Is it bad news? Gee, if the Fed's pausing, maybe they see that the economy is really starting to slow down quickly, and they're a little worried about that. Inflation came in a little bit hotter than expected, but largely within expectations. So not a lot of news to drive the market there either. Friday, we do get some trade numbers from China, import, export, GDP, retail sales in China. We'll take a look at that news in general. China's economic activity has been very, very slow, so that's kind of a drag. We saw Europe came out with their final on Q2 GDP, 0.5% growth. Well, we're not going to see a whole lot of growth out of Europe. We're not seeing a whole lot of growth out of China. Economic conditions start to soften in the US. Where's the growth going to be coming from? So until we have some of those answers, we can expect more choppy trading within this range. It's okay if you have a really, really weak stock, you can short it. You don't have to worry too much about the market in here because it's not going anywhere. Same is true on the long side. If you have a really, really strong stock, you can trade it on the long side because it's doing all the heavy lifting and it's continuing to move in that direction. You just have to know that because you don't have a market tailwind, you trim your size, you trim your trade count. And until you get this breakout and until you get some help from the market, you know that the stock is going to have to do all the work. So let's go in and find a bullish pick and a bearish pick. And I'm going to go into, let's see, we'll go into maybe green royal flush. And we'll go right to the top of the list. You know I like using green royal flush. It's one of my favorite searches for swing trading. And if it sets up well for a swing trade, then it's probably going to set up well for a day trade. This is a major horizontal resistance level for Amazon. You can see we've got these high minus trend lines. We've also got some high plus trend lines converging right at this price point. I like Amazon. We're above all the major moving averages. It's got good relative strength. You can see how the volume's been popping up recently. Do I buy it right here, right now? Well, if we get a breakout above the 50-day moving average, a close above the 50-day moving average, and any kind of volume, any kind of strength in here at all, yeah, I think Amazon is going to be a really nice stock. They're super strong on the retail side. They've got AWS working right now. They're involved in artificial intelligence, so they've got the right mix that will excite investors. So, yes, I like Amazon. Let's zoom in, take a look at the price action here recently, and you can see the market's been chopping around, rally, 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 drop. What did Amazon do during this market drop? Huh, nice. Moved higher during this drop. That's why it has relative strength. That tells us that institutions are in there buying. On a fairly lackluster day today, you can see this nice, long, almost bullish engulfing candle taking place and working its way through this resistance level. Would like to see nice volume by the close of the day. So let's go into M5 and see if it's got the volume today. Hey, looky there. We've got some decent volume in Amazon. So yes, I like Amazon. I think it's a stock that you can buy on dips. We really want to see the market close above that 50-day moving average, and we want to see any kind of follow through and any kind of volume, then I think Amazon works very, very well as a long. So let's go in and take a look at the short side. I'm going to click bearish, take a look at some of those searches, and I'll go into red royal flush. There are a couple of stocks that I like. One is Burlington. Actually, there are a number of stocks. You're going to notice something common here to all of the stocks in the list. Burlington, retailer. Crocs, apparel. DG, retailer. Best Buy, retailer. Now, what I'm looking for is I've got my columns set up so that I can see if there's heavy volume on a 5-minute, 15-minute, and a daily basis. I need to have volume. If I don't have it in the market, then I dang well better have it in the stock. And the stock better be showing me some technical breakdowns because it is going to have to do all of the work. So let's take a look at the chart on Burlington. And there we can see nice, steady downward price action. The stock does have some choppy behavior in it. So it's not a straight shot. You can expect some retracement. And so when we trade stocks like this, you want to wait for those failed bounces and then you want to short. And you want to trade smaller size because the stock is so choppy. Take a quick look at Crocs. You can see that downward pressure, orange line below zero, relative weakness, not great volume. So we've got lots of retailers in here. KSS, another retailer, and M, Macy's, another retailer. Apparel also fits within that category. So yes, we're seeing weakness in apparel as well. And I don't know which search the stock has been coming up on, but I do like AEO as a short. And that's going to be a stock that I feature today as my bearish pick. So let me see if I can find that. It's not a breakdown search. Well, let's bring up the stock and let's take a look at why I like it on the short side. So there's your earnings announcement right there. That A signifies that the earnings came after the close. What did the stock do? It opened on its high and it closed on its low. So this is a new, I believe, 52-week high even for the stock, which it was. And that end result was a bearish hammer, a bearish engulfing candle, followed by a red key bar. So that earnings announcement has had follow through selling. And we can see that the stock is about to challenge that 50-day moving average. There is a lot of profit taking that's happening within AEO. Upward sloping trend line comes into play right about like this. You can see it visually. That's been breached to the downside. This is what I call a failed breakout. What's a failed breakout? So we have resistance, 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 boom, we get through. All right, this is great. This is what's going to excite a lot of buyers when the stock makes a new 52-week high. Well, then we have the earnings announcement and we have a lot of selling afterwards. Anybody who bought this breakout in here is now underwater. They're losing money on that trade. So they start exiting the position for a small loss, a little bit bigger loss if they wait. And now this is causing that nasty backside. Once you have that failed breakout, you see a lot of natural selling from these late entries and from everyone else that's been profit taking after a very nice run like this. Steep trend lines like this are an indication that the stock could be overbought in this case, because you typically would like to see a nice 45-degree angle with lots of fits and starts and stopping and starting and gradually working its way higher. When a stock goes parabolic like this, sometimes it could be caused by a short squeeze, short covering if a lot of people were short the stock. Could be just good news from the company also, but probably not good news because there's your earnings right there previously, and there is your earnings reaction, which is a big gap down. So that tells me that the earnings couldn't have been that spectacular. This is probably going to be some type of short squeeze that's happening in the stock. Let's zoom out, take a longer term look at this one and see what it's got going. And you can see once it sets the trend, it tends to continue. Once it sets the trend, it tends to continue. So I like this. I think it's got an easy shot down to the 50-day moving average, perhaps even down to the 100-day moving average. The key right now for this stock getting going is that it's got to be able to close. The SPY has got to be able to close below the low from today, below that 445.08 level. So if we get a nice red candle in here this week that takes out that 445.08 level, cool. Now we've got a little bit of room to this upward sloping trend line, but that gives us kind of a negative backdrop for the market, and it could easily test that trend line, and that's going to give us a slight little tailwind for AEO to start working. So retailers in general look very, very weak to me. We can come into this list and you can see this is VFC. That's another apparel company. DG has been super weak. Look at that big breakdown right there. That is a big gap. That's your earnings right there. Lots of follow through to the downside. So right now, retail is looking very, very soft. We want to stay with those sectors and groups that are weak relative to the market. That's what we've got working for this particular stock. So Amazon on the long side, I like it. Watch for that breakout above the 50-day moving average. Let's take a look at the bearish explosion alert for APA. Energy stocks have been very strong recently, and I'm not seeing a big massive breakdown here. Usually, you can see this is probably a news related item. There's your volume spike right there, breaking through the prior day's low. And we've got a nice long candle closing on its low, followed with some selling pressure. So yeah, it's a nice bearish explosion. I wouldn't jump on it right away. It's a commodity stock. I'd be watching it to see if we get some follow through. If we do, on a daily chart, we do have a little bit of resistance in here. We really need to take out that support level. We've got the 50-day moving average close by too. So interesting. Watch it, see what the news is. There might be a little bit of a day trade in there. But back to the normal conversation about the market. Above the 50-day moving average. That'll give us a little bit of tailwind to get to this downward sloping trend line at about 451. That would help a stock like Amazon. We get that breakdown below 445.08. Then we've got a little bit of room to this upward sloping trend line. Those little tailwinds are going to help the long and the short that I've highlighted for you today. We need that catalyst. We got to break out of this range. We're through the summer doldrums. We should expect to see normal volume levels return this week and next week. Then we kind of get into a really nice, robust fall trading session. Thanks so much for watching, everyone. Please make sure to leave your comments. And I will be doing a video Sunday evening, so we're going to get back on track.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.